Warnings from Target and Walmart sink stocks yesterday. Where are we now and what happens next? That's what's coming up on today's edition of 3 Minutes on Markets and Money. We had talked about yesterday morning that it was okay if the market sold off a little bit after that very big advance that we had on Tuesday. Had a sharp rally day on Tuesday, up about 3% on the S&P. And we had said yesterday morning that if the market sold off a little bit, that was okay, but not if the market reversed all of the previous day's gains. Unfortunately, after warnings from Target that suggest a recession is either closer than we expect or already here, markets did sell off rather sharply. The S&P not only giving up all of yesterday's gains, but also all the gains going back to last week. And that's a very unfortunate thing. Markets now back to testing 3 standard deviations in the markets below their 50-day moving average. But technically, a lot of bad things actually happened yesterday. And because of that, we actually raised a bit of cash yesterday in portfolios. The markets rallied right back into support that we have been holding really ever since earlier this year, back in February when Russia invaded Ukraine. We ran right into that resistance level and really about where the 20-day moving average is, failed at that resistance level. So now this recovery from the break of this low now becomes resistance. And this is going to be a very important level of resistance that the market is going to have to break above in order to get this rally back on track. So there's going to be a lot of work the market has to do in the near term. Unfortunately, we talked about yesterday, we were very close to triggering a MACD signal. That failed yesterday as well. That signal did not cross yesterday. Money flows are still a little bit positive here. And really, despite the fact the market had a very big sell-off day yesterday, negative money flows were still improving. So we're still seeing a little bit of positive action underneath the surface of the market. Again, markets are very oversold. There's been a lot of selling here. Markets are down for 7 straight weeks in the row on the S&P, 8 weeks for the Dow. So again, that's a bit heavy on the selling pressure. We've likely approaching a point of seller exhaustion. But again, markets are not really back to oversold just yet. We had started working off that oversold condition. They can certainly move lower from here as well. This morning, markets are going to open down following yesterday's sell-off. Not surprising because of the depth of that sell-off yesterday. A lot of people woke up this morning and went, oh my gosh, got to put sell orders in. So what's important today is markets need to hold these lows, these intraday lows from last week. If we can do that, we're going to be in 3 standard deviation territory when we get down here. But if we can hold these lows, potentially, we can potentially set a double bottom here. That would be encouraging. Again, lots of resistance right here at the 20-day moving average. So we've got to have a fairly strong reflexive rally move above that resistance line if we're going to change the tenor and tone of the markets. Right now, there's not a lot of positive catalyst to suggest that is going to be the case near term. So there is definitely risk to the downside here that you've got to be aware of. And again, this is why we raised a little bit of cash yesterday. Not getting too aggressive on the selling just yet. But if we do start to break these lows today, tomorrow as we wrap up the week, we're going to start being more aggressive on raising some more cash. Again, be a little cautious here. Don't want to overreact. Markets are very oversold. The investment sentiment remains very negative. We've had a lot of selling pressure in the markets over the last 7 weeks. So want to be careful here we don't get snapped into one of these kind of reflexive rallies that can occur in markets, and that typically tends to trip up investors. This is why investors typically sell low and buy high. We want to be careful of that. That's definitely a possibility. There is risk, though, to the downside, so don't dismiss that either. I'm Rose Lance Roberts for 3 Minutes on Markets and Money. Talk to you again tomorrow.